The market has entered a volatile phase, both globally as well as in India. This may be short-lived, we don't know. How should investors respond to this turbulence? Welcome to Geojit Spotlight. Yesterday, there was a 2.04% correction in NASDAQ, the tech-heavy US index. There was big selling in some artificial intelligence stocks. Selling in AI stocks this year was expected. What was not known was the timing and the extent of the correction. We will have to wait and watch the trend in AI stocks. If there is a gradual correction, a gradual slow decline in AI stocks, that will be good for India. Because as explained many times, last year's trade, 2025 trade, was globally an AI trade. Whether it was in US, China, South Korea or Taiwan, it was an AI trade. India, being an AI laggard, didn't participate in the AI trade of 2025. Therefore, an unwinding of the AI trade globally will be positive for India, because foreign capital flows are likely to come to emerging markets like India. However, this AI trade unwinding has to be a slow and gradual thing. If there is a big crash in, say, the AI stocks in the US, impacting the entire US stock market, all markets will be impacted. No market will be spared. So closely observe the trend in AI stocks. Coming to India, the huge volatility is confined to IT stocks. The Anthropic Shock has triggered a big sell-off in India's leading IT stocks. The market fears that Anthropic's AI tool, Cloud Cowork, will impact the business and profits of India's IT companies. What will be the impact? How much time will it take? These are the relevant questions. But unfortunately, no one has a clear answer to these questions. Many tech experts say that the AI tools like Cloud Cowork can do many work which our Indian IT companies are doing now. The AI tools can do this work with much more productivity and therefore much lower cost. So this technological disruption can have a long-term impact on India's IT stocks. But the same experts say this will not happen overnight, not immediately. Vishal Sikka, former Infosys CEO and a leading tech authority in the world, in an interview this morning said, I quote, "Enterprises are complex and slow to adapt to technology," unquote. Vishal Sikka also added that productivity gains from generative AI can be substantial. The market always reacts very quickly, but the impact on the industry's revenue and profitability will happen only slowly. Meanwhile, if Indian IT companies can quickly adapt to this change and make themselves more adaptive to this AI disruption, well, this immediate trigger, negative trigger, may not last long. Perhaps this may be an overreaction. We don't know. It is better that investors wait and watch for the dust to settle. Meanwhile, Indian domestic consumption sectors are doing very well. Telecom, financials, capital goods, automobiles, etc. have come out with good results, and there are indications of improving prospects. And the market is responding and rewarding such excellent results, whether it is from autos or from jewelry business or from capital goods or even from financials. The market is rewarding good results handsomely. Now, therefore, investors can focus on the domestic consumption themes which are not impacted by technological disruption. These sectors which I mentioned now, domestic consumption driven sectors, will remain resilient even in a weak market.